You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO. This Week in Futures Options. Yep, TWIFO. This Week in Futures Options, a program where, as the name implies, we break down the week that was and indeed still is from a futures options trading and trending and all sorts of fun stuff perspective. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And hopefully you guys are seeing this, that the link is indeed working again, because I know we had some problems with the live stream during Vol Views. Should be back up and running. Let me know if you're having issues. We'll try to get it sorted out, because we are coming to you not from the Options Insider Studios in lovely and scenic Chicago, but actually from the Southern Studio today. So it may sound a little different. Live stream may work a little different. Also, if you're listening live, you're not going to get the fun music and interstitials between the segments this time. That's only going to be reserved for the podcast listeners. What you do get, though, the fun carrot from Nick and his team over there, is you get those links. They're active until about 2:30 p.m. Central Time, 3:30 Eastern. So if you want to play along, click along with the links. Go for it, sirs and madams. You too can have the fun. Let us know. Let us know if the stream is working for you out there, because we like to make sure you guys can join us live and see how things are working. And of course, you can always listen after the fact via the website, theoptionsinsider.com, as well as, of course, iTunes and Stitcher and our mobile app. It's all there. So just let us know what you think, how it works, what you like, what you don't like, and we'll put it in to future shows. Maybe some products you want us to hit on, maybe some different analysis you want us to do, maybe some interesting stuff you want us to take a look at. We love your suggestions. Keep them coming. You guys know how to hit us up. And if you don't, it's all baked into the mobile app, available for all of your favorite podcasting platforms and indeed all your favorite app stores. So check it out wherever you get your favorite apps. And joining me on the old program today, Mr. Nick Howard, my cohort, my partner in crime from over there in the land of Quick Strike. Mr. Nick, welcome back to the program, sir.
Hey, I feel like I'm teaching one of my online courses that I did many years ago when I was doing computer classes, and nobody's in the audience, but I still have to keep talking because I'm looking at the audience right now in the live stream, and it's just you and I. So these are good and bad memories. Can't make a joke if nobody's listening.
It's
right?
the fun of technology. Yeah, so we'll try to get the live back. Of course, all the listeners on the podcast, you love Nick's jokes too. So Nick, you have to do your jokes for the on-demand listeners today.
For the regular.
Can you handle that?
It looks like we got one. Somebody joined. I know we're live because I could hear us online. But well,
there you go. It's working.
There's only one more person out there, so we'll do our best.
We'll do our best for that one person while we make sure all the folks listening after the fact via the app and via iTunes and everywhere else, you guys have all the fun. And if you haven't made it over to live for a while, check it out. Those links are live, and it's kind of fun. You get to see what Nick and I see, not just a report, but you actually can dig into it. So check it out over there if you haven't done so as well. And Nick, I think we're going to flip the script this week. We're not going to just dive into our usual bread and butter. Crude has been moving quite a bit. We're going to get to that, don't worry. But let's kick things off actually in an area we don't get to talk about a lot, which is the ags. We keep an eye on them. Soybeans were hot for a while last year, and we certainly hit on them when they were big, and a few others pop up every now and then. We don't get a chance to talk about them a lot, but corn is lighting it up for a variety of different reasons this week. Selling off quite a bit out there, about 25 points out there, pretty much across the board out there in corn land. So around 6.5% for a lot of the months out there. So a pretty aggressive sell-off out there in good old corn. We also saw some options lighting it up this week with net open interest up about over 5% actually this week, which is pretty strong. Also, the QuikSkew just going, I guess you can call it a technical term for that, crazy, Mr. Nick. QuikSkew moving quite a bit, aggressively coming off, depending on where you're looking on the term structure, 3.5 points in some cases, a little bit less as you get farther out. I'll let Nick, in fact, let's get into that now, Nick. I'll let you break down what you're seeing out there in the corn space, because it has been kind of interesting to watch. And I know you've been watching it quite a bit. Maybe where do you want to start? In the volume, or you want to start in the QuikSkew?
How about we go to QuikSkew, and then you could run through the volume if you'd like. I just wanted to point out it's we see the futures are off quite a bit today. And if you're looking on Twitter, there are people who are asking, I think obviously tongue in cheek, that if the CME would close the floor a half hour early just to get it over with, because it was so bad down there today, I think. But I put out something during last week's show, or even in the middle of the week. I forget when I tweeted it, but I think it was last week, because I think it was last week, Thursday, maybe just before the show. And if you look at the August and September contracts, we have a really wide spread between the put and call values in relation to the at the money. So the puts are probably as cheap or almost as cheap as they've been, and the calls are not quite as expensive, but still really expensive. So I threw something out there in the show notes, and we could talk about that a little bit. And I actually tweeted something as well. And again, just for everybody that's out there, I'm not trading. I just look at the numbers, but I do pay attention to, the levels and just sort of make suggestions based on that kind of stuff. But I got to tell you, with the market off and the calls really bid, and the separation from the puts to the at the money and the calls to the at the money, it just looks like this QuikSkew. I've been calling it the QuikSkew trade. It looks like it might be a good place for it, where you buy the 25 delta-ish puts and sell the 25 delta-ish calls. And then the way I like to do that is hedge with an at the money synthetic. So basically you're doing a put spread and a call spread. And this way you're really just taking a relative stance in volatility. So you're buying cheap put volatility, and you are selling expensive call volatility and hedging with flat volatility at the money synthetic future. So if you take a look at that, we can even build it after the show or beginning of the week, or we'll build it after settlements and then watch it and talk about it again next Friday. But it just seems, and the other interesting thing, I've seen it, but I guess I really haven't paid as much attention as I should in terms of just the trend. But I looked over the last 3 years of corn in the 25 Delta QuikSkew chart, and I also tweeted it, so you can go take a look at it. And you can't take a look at it now because you're not listening, because nobody's listening right now. But when you're listening later, you could take a look at it on Twitter. Actually, some people are listening. And you'll notice that the puts are rarely more expensive than the calls in the corn. And it's probably has something to do with, just the way that product trades. But I looked over 3.5, 4, 5 years, and there was only like one instance where the puts were more expensive than the calls, and that was when there was a significant break, and that only lasted a pretty short period of time. So, but that's not saying this trade isn't good. The spread between this is really wide, and I think it's worth taking a look. And if nothing else, given that the market's off, the puts are still beat down pretty good. I'm going to go out there and say again, if you're looking for low volatility play as well, you can buy the puts and buy futures, right? So even if we retrace here, you got a pretty good trade on your hand. So again, those are two things that I see that sort of strike me when I look at the QuikSkew, as well as just the fact that volatility got pretty much pummeled today or this week in the corn. I don't know. Let me see what it did specifically today. Specifically today, it's up a little bit, but this week it got hammered pretty good. So that's what I'm noticing, Mark, from the vol and the QuikSkew standpoint.
And it has been fascinating. I like that we get a chance to start off in corn a little bit this week. Mix it up a little bit. I love talking crude, I love talking gold, talking E-minis and all the other fun stuff. But it's nice to mix it up. So I guess you can say this week our surprise product is an old favorite, even though it hasn't been around in a while, which is corn. And let's look into the numbers, what was lighting it up this week. And, of course, July going off the board today, so I actually had to go get those the old-fashioned way. I'm actually pulling them up right now, the same page you guys can get them, cmegroup.com/TWIFO. You guys can do exactly what I'm doing because the links are all live, which is really cool. And you'll see right now the former front month, now gone, 370 puts. We're lighting it up to the tune of about 30,000 contracts and change. A good chunk of those, about 12, nearly 13,000 coming on Tuesday. A lot of that, actually, a good chunk of that closing on Tuesday. So maybe a little bit of froth there, a little bit of back and forth trading over there. About 8,000 going up on Wednesday. So about 21,000 on Tuesday and Wednesday of that 30,000 on the week. Number two are the 380 calls again in that foregone front month. There, about 26,000 and change. About 8,000 of that coming on Wednesday, 9,000 of that on Tuesday. Again, actually slightly closing on the week as well. So a lot of back and forth trading out there as well. Then we move on a little bit here to number three, the what are these 370s out there also in July with about 21,000 and change, about 10, nearly 11,000 of that coming on Wednesday there. So an interesting month. Then we go a little bit farther out, actually, out here into the SEP contract, where we see that it was, what was these? These are the 400s lighting it up, which is kind of interesting out there in corn for this week. About 21,000 and change, 6,000 on Tuesday, and actually almost exact same number, 6,000 and change on Thursday as well. So about 12,000, almost half, a little more than half actually, of that 21, nearly 22,000 contracts going up on Tuesday and Thursday, followed by the 350 puts. So it was kind of just a very active week out there in corn. Again, the lion's share of that in the front month, or the former front month, July, and now as well as SEP, 20,000 and change of these 3.5 puts, 350 puts. A lot of this opening looks like a good chunk of this opening actually this week, including about 9,000 and change going up over there on Monday. And Dees also active. The 400 strike seems to be a popular choice. It was active in SEP. It was active in Dees, even active in the AUG chain this week. So 400 the strike du jour, which is interesting because it was selling off well south of that level. It was about 365 to 380 or a little more, depending on how far out the chain you're going there in corn this week. But all the contracts well shy of that 400 mark, and yet the 400 strike was kind of the strike du jour this week out here in corn. Interesting stuff. I don't know, Nick. I don't get a chance to talk a lot of ags, so it's kind of fun, I think, just to mix it up. Any other thoughts here on corn before we move on into some of our old standby, sir?
Yeah, I didn't realize my mic was open, so I hope I didn't do anything that I wasn't supposed to do.
It was horrible.
For that,
the things you said were horrible, sir.
Yeah, I didn't swear under my breath or belch or anything like that. That's good. Anything else interesting? I guess just looking at, you mentioned the 400 strike, and if we take a look at that from an open interest standpoint, for the most part on the August and the September, the Q and the U, those are if not the highest, in second place in terms of open interest. So seeing a lot of trade, probably in what's considered a level, a sort of a barrier at this point, the 400 strike. And, and we are off 26 and change this week. So you were trading 390. So given that we started the week around the 390, it makes sense that strike out or two strikes out traded a significant amount. We didn't really see the break kind of carry through until Wednesday, and that's when we broke down to the 370 strike, and then we followed through from there. So that's why you got so much activity around the 370 strike as well, because we spent a better part of Wednesday there, churning around the at the money. So we start up in a 390, 400 range. We might even trade it up to, what was the high we traded this up here in the August contract this week? It looks like we might have hit. Yeah, we hit 388 on Monday. So, we were trading, one or two strikes out of the money. That's why we get the big volume there. And then we traded around 370 for quite a bit of the day, or we started to trade through that range on Thursday, or trade down to it and Thursday, and then through it on Friday. So, again, these commodities all seem to be acting fairly similarly, right? They're trading within a range. We're seeing the same strikes sort of trade over and over again. We're not seeing a lot of speculation in varied strikes outside of these ranges, at least not a tremendous amount. So, we're fairly range bound, it appears, at least in the stuff we've been watching. And to be honest with you, I tried to look around a little bit before the show, look at gold, and, there was some stuff, but not a great amount. Try to look at even silver and palladium or platinum, and there's just not a lot of love out there in general for things. And I do want to throw one thing out there, Mark, and maybe you can talk about this when we do look at crude. It's people talk about oil price not going up, right? Why isn't oil going up? Why does oil have to go up? Isn't it good to have oil sort of at a reasonable price, so we're not getting, pillaged at the gas pump, and it's not costing too much for companies to run their factories and that type of thing? Or, does it have to go up? Does it have to go up only because traders want it to go up, and the producers obviously want it to go up? But it's kind of good to be stable, isn't it? I don't know. Maybe you can answer that question or give me your opinion at some point.
Yeah, I've said that before, and I guess we'll transition to crude on that one, because that is a good point. And that's something I've said before a bunch of times, that naturally we are all inherently short crude. It bites us all whenever this thing starts tweaking up, because then, of course, you mentioned the obvious thing, like at the pumps, but it hits us pretty much everywhere. It gets the transportation cost of all of our goods to heat our homes, so all of a sudden price of goods at the market go up and everything else. So as crude keeps ticking up, you're right, it impacts us all pretty much across the board, which is not perhaps the ideal thing. You're right, I see why the market is arguing now why perhaps this is something that needs to change, though, because they're, of course, looking at it from a trading perspective, and they see how U.S. crude production, which was supposed to go online and really crush a lot of the price of crude going down the line, a lot of that can't kick in if the price of crude is too low. Of course, we all know shale doesn't kick in till around $70, $75, somewhere in that range, depending on the analysis you look at. So they're saying shale can't come online, and so maybe in the long run this could help increase our dependence on foreign oil, those sorts of things. So there are some arguments why crude could be a little bit stronger, but I'm with you. We all are inherently short oil, so unless you're speccing a lot of these stocks or looking for them to, you bullish them and want these stocks to make a comeback, you're kind of right. inherently it is at least these levels are not too long-term traumatic. If they start, if it starts dripping down too far, then I suppose if we start seeing production, kind of grind to a halt in some of these names that can no longer afford to produce, that could lead to longer-term, structural changes in the marketplace that could lead to longer-term prices. But I'm with you in general. I think, cheap crude, when we're all inherently short crude at the end of the day, is not exactly the worst thing, not just in summer drive season, but all the time. You got other thoughts on this, Mr. Nick, before we dive into what's hot out there in crude?
Yeah, I just was, I remember, and I don't remember the exact event. I think there was a big fire or something, or a rig had a big problem 3 or 4 years ago. And this is before I was paying too much attention. But I remember going to the gas pumps, and because everybody kind of panicked and went to fill up their tanks, and all I could get was premium at the BP. And I think I paid like $3.45 a gallon for the premium. And I was at the pumps yesterday putting premium in my car, and it was $3.17 or 20 cents. So, and I believe gas was 80 or 85, or oil was 80 or 85 back then, and now it's 42.5. So it's half the price, but the gas pump price was exactly the same. So you tell me if it really even makes a difference. They're keeping it high, even though the barrel price is half is what it was back then.
Yeah, funny how sticky those prices at the pump can tend to be. Crude goes up, amazing how fast they go. They go down, they tend to be sticky a little bit. We'll get into that macroeconomic factor perhaps on another show as we dive into what was hot, what was lighting it up this week out there in crude. I know a lot of you guys were keeping an eye on crude. It was kind of the big thing. The big, much talked about topic this week. A lot of you guys looking at crude, it's kind of wringing your hands, saying, what's up with crude? What's going on with this sell-off? This is kind of crazy. In fact, we asked him right before the show, Nick. We had a little flash poll. We said, hey, crude oil taking a beating. Is the sell-off overdone, or is it a sign of things to come? Where do you guys think WTI will be at the end of 2017? We gave you 4 choices. We said so around here in this range. Crude right now is around the low 40s, 43 or so. We said around this range, so somewhere in the 40 to 45 range. You think it'll be much lower, so about below 38. You think it'll be a little bit higher, so north of 50 to 55 range, where it was not that long ago. Or much higher, a.k.a. north of 55. Mr. Nick, what are you feeling? What do you think is winning our poll, sir?
I'm going to go with what I would think. I think around here is going to be winning the polls. Because there's no way it's going past 45. Can it go much lower? I think we'd actually see some interesting trade if we got below 38. So I'm going to say around here, like the Counting Crows, round here. I'm going to say round here, a la the Counting Crows.
Around here. Well, let's see what our listeners are saying so far. You got about an hour left in this one, listeners, if you haven't done so already. And looks like about 45% so far in the early voting saying less than 38. So they're kind of expecting a nice sell-off this week. About 36% are in the Nick camp of around here, about 40 to 45. 10% saying much higher, 55 or north of 55, and only 9% saying a little bit higher, 50 to 55. That'll keep going for another hour or so. I'd like to gauge your sentiment on these things sometimes as we start diving in to these bad boys. But, of course, crude has been the talk of a lot of people this week, with the futures again selling off net on the week, selling off about 2 handles, about a little over 4%, ending the week in that 43 and change range, which is probably lower than a lot of people out there may have thought. Maybe thought 45 would have been kind of a new floor for crude. You might rebound off there, get back into the high 40s, maybe even the low 50s, but not the case this week. We saw continued downside, and we know that means from a vol perspective, when we see downside in crude, guess what? We see a little bit of green on the screen when it comes to volatility. That's exactly what we saw this week, with the vol up pretty aggressively, up about 3 points, sometimes a little more, closer to the front term there, but 2 to 3 months out in the 3 to 3.5 point range, vol points, of course, I'm talking here. So pretty aggressive increase out there. Remember, we said this before, how the puts were long-term structurally leading the dance when it came to implied volatility skew out there in crude, and I think this maybe surprise tail end to the sell-off here, getting it down to these levels helped exacerbate some of that vol a little bit. So we saw some nice juice popping back in. For all of you who said a week or two ago on our question of the week, where's the vol going to come from? About a third of you said you were looking to crude. Now that seems like index vol has kind of gone the way of the dodo. Looks like that was a well-timed trade on your part, as at least for this week, crude vol is back. We shall see again. We've seen this play out before. We see the crude sells off, the vol comes in, the sell-off can't be maintained, and the vol comes back out again. This sell-off so far has been maintained, so AKA we're seeing the vol stay right where it is. We'll see if this balloon holds its shape next week, or if it pops. If a sell-off reverses itself, then we may indeed see that materialize. But still, for this week at least, vol is pretty juicy out there. It's been a while since we said that, Nick, so it's kind of nice to say that. Open interest also up pretty aggressively, about 8.5%, nearly 200,000 new contracts pouring in this week. So yet again, crude just a very, very active product. And number one with the bullet, what was the hot strike, the big trade du jour out here this week in WTI, and it was the 40 puts out there in August, with about 37,000 and change of these bad boys, including about 17,000 going up on Wednesday alone, about 5,000 of those opening, about 8,000 going up on Tuesday. Number two, hot on its heels, were the 45 calls, also in August. So again, a lot of front month paper, nearly 50% of the paper going out there this week going up in the front month. 34,000 and change, including 13,000 on Tuesday and about 11,000 on Wednesday. So about 24 of that 34 going up in those two sessions. Number three, of course, are the 42 puts. So a nice little tight range there, 40 to 45 or so in AUG. 32,000 of these puts going up, 11,000 and change on Tuesday, 11,000 and change on Wednesday as well. So about 23,000 total going up on those two sessions, a good chunk of those opening as well. So interesting paper pretty much across the board. Of course, longer term, it was about half of the paper was in the front month, but a little bit longer term didn't get ignored, including our old friend Deese. In particular, maybe someone who voted in our poll today, because the Deese 52 calls were surprisingly active, doing about 19,000 contracts this week. Almost a good chunk of that, about 8,000 contracts of that was opening. So interesting stuff, including of that 19,000, about 10, almost 11,000 going up on Wednesday alone. So a pretty active day, and a lot of that opening. Interesting, we're seeing so much opening call paper in December. It's near-term upside. It's not super far out of the money. Of course, so the sell-off has made it a little bit farther out of reach. We'll have to dig into those a little bit more to see if perhaps that's some aggressive overriding going on out there, if we got the crude bulls piling in, and they've set their next, they've drawn the next line on the upside there at 52. Again, it seems like it's a long way away, but a few weeks ago we were trading in that level. So 52 perhaps not as distant as it may seem. If you want distant and you want out of the money, you got to go out to Deese of 2018, so about a year and a half away, where we got someone piling in yet again to the 60 calls all the way out there as well. Nearly 5,000 of those bad boys trade in this week, including 2,000 almost on Monday and about 2,500 on Thursday. So a lot of paper. I can see some trading back and forth on that strike this week, which is kind of interesting. Some of that actually was closing this week. A total of about 20,000. A total of about 5,000 traded this week, and there's a total of about almost 21,000 contracts open on that strike. So the Deese 2018 60 strike, perhaps a little bit more active than you may have assumed this week. So a lot of interesting stuff lighting it up this week, Nick. You know, we've got these Jan 44 puts lighting it up. Jan 2018 44 puts lighting up, 1,700 of those. 35 puts out here in June, Nick. 35 puts lighting up. Again, maybe someone voting in our poll today, voting with their dollars this time. 35 puts in June of next year, almost 7,000 of those trading this week, including about 3,000 on Monday, about 3,000 on Tuesday, 2,000 on Monday. Good chunk of those both opening. The lion's share of those opening this week, about 9,000 and change open on that strike. So a nice, interesting, of course, we have a good tight range in the front month, which is we expect, Nick, trading in that 40 to 45 range on both sides, calls and puts. You get a little bit farther out, you get a nice, interesting dichotomy of opinions out there. You got 35 puts, you got 60 calls. Interesting stuff. What was catching your eye out here this week in crude, Mr. Nick?
Yeah, similar things to what you're saying. August and Sep, a lot of 40 puts, a lot of trade there. Not a tremendous amount that was some opened. I guess we got about 7,000 opening in the August, and then not so much in the Sep, but they did trade around in there quite a bit. So you got to remember, we traded down to below, whatever, I think it was 42 and change. What was the low here? 42 and a half is where we traded today. And this week from a low, what do we have? We have, 42.20. So again, you're going to, as we go to a strike, we're going to see more activity in that strike. And then we're going to start to see activity. If it's directional, we're going to start to see activity below that strike. If it, since we were moving down, that's what I would expect. But I looked at the long-term rolling front month contract, and we haven't been down below 40 or near 38 for over a year, last April, May, I believe it was. And, it would be really interesting to see 38 again, because now we're starting to talk about people not being able to stay in business at those barrel prices. So I just, I don't know. I don't see that necessarily. Well, again, I don't know anything, but it just based on what the OI looks like and the direction we've been having and the activity around these strikes, it feels like a 40 to 45 range, or maybe it's the 38, maybe it's a 37 and a half to 42 and a half now, because we've been staying in these pretty, tight $5 to $7 bands over the last year, or at least as long as we've been talking about it. As far as anything interesting, you mentioned that there was an increase in volatility, as you're going to expect, right? We always talk about that 2% move, and then the next 2% is the increase in volatility, and I think that's pretty much what came about this week. Didn't see much change from a risk reversal and QuikSkew standpoint. We saw the puts get a little bit more bid in the August contract, but not really much of a change at all when we look. I guess if we look in the middle part of it, if we look at the latter part of the year, October, November, December, we saw calls get a little bit better bid in relation to the at the money. So a decent move up. So it feels like, just looking at the QuikSkew charts, it feels like that band is tightening, that the difference between the call and the puts in relation to the at the money, that has tightened a little bit in relation to where it's been historically. So I think that we're going to start to see sort of a balancing out of the vol curve here pretty soon. If we go below 40, then we're going to be probably sitting in the belly, and we'll start to see that smile take place a little bit. You might have a little bit of a bid to the puts, because there'll be that fear that we're going to go lower, but I don't see how much lower we can go. Even if we approach the lows that we had before, it seemed like we can't get much of a change in skew from the worst that we've seen over the last year. So it'll be, nothing really to report. I would say, if you're watching or listening, or, click through while you can, or if you need to see a chart that you can't see because you're not on during the show and you want us to throw something out there, let us know, and we'll tweet something over the weekend. Just shoot us a note via Twitter, and we'll pay attention and watch.
Speaking of Twitter and crude, the vote's still coming in, changing a little bit. 50% saying much lower now for crude, less than 38. Only about 29% saying it's going to hang out around here, about 40 to 45. 14% saying between 50 and 55, and 7% saying much higher, over 75. So it looks like the downside, maybe listening to Nick and changing their votes. I don't know. Either way, we got about an hour left, so make your voices heard if you haven't done so already. Meanwhile, speaking of making their voices heard, we got some good questions on products. Nick, should we head into some of their questions, you think?
We should. I'm sorry, I didn't know if I was on or not. Let's do it.
You're having all kinds of mic issues. Yes, I think the answer is yes. Let's do it. So
can't mumble. Yeah,
without further ado, let's head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. Like the man said, this is the portion of the show where we break down what you guys want to talk about on the old show. We got a bunch of questions, so let's get to them. Let's start off here with some product. We like the product suggestions, and you guys have them. This one comes from Ian Wagner, and he says, hey, TWIFO, I'm confused about gold options. Well, we're here to help, Ian. He says, is there an option contract that tracks the future, and is it liquid? I often only see GLD and FUT. Well, I guess, Nick, I'm guessing he hasn't listened to the show before because we talked about gold a few times, have we not?
We have, yeah. So there's definitely futures contracts that track gold. That's for sure. And they are liquid.
So let's get into that a little bit because there are indeed options on those futures. There are indeed the COMEX gold futures out there. So a lot of you guys like GLD, and we're not averse to it. You know, GLD and SLV are the metals. The metals ETFs are interesting in that they actually hold the physical, so they don't suffer from a lot of the problems that your typical ETF does when they're trying to replicate some sort of underlying position. If they have to hold a basket of futures, or whatever the case may be, you see this a lot in a lot of the other products. Could be the volatility ones. It could be crude, whatever the case may be. Trying to replicate the underlying with a basket of futures is a challenge. Where do you trade on the term structure? Whenever you start making those choices, you've made trades that could impact how your product actually tracks the underlying. GLD and SLV don't have to worry about that. They have to hold the physical, and they hold the physical, so it tracks the underlying fairly well because they have it. That said, some people argue about how their deposits and that sort of thing. I won't get into that. There's a lot of conspiracy theory stuff when you get into the metals. But that said, there are these products, and we could talk about them right now. Like we have many times on the show, these active COMEX gold here over there on CME. Let's kick it off this week, Nick. It was another active week for gold. Open interest up about 3% here this week, and the hot contract here yet again in the old COMEX gold for this week was the front month, the July contract. It's got about 4 days to go, so it's going the way of the dodo pretty soon. Get in if you haven't already. About almost 40% of the paper went up in this product this week. Gold, this is actually a surprisingly quiet week for gold. We've seen a lot of stuff recent weeks where gold's been moving aggressively, up aggressively, down aggressively. It's kind of hovering in that mid 1200 range right now. So this is one of the few weeks where, I guess outside of this question, we probably weren't planning to talk about gold because it wasn't really lighting up. The futures kind of unched, slightly moving a little bit this week. Vol also moving, but it's moving slightly. I've said before, gold is one of the more active players from a skew perspective. Not so much this week because not a lot really happened to really change the demand significantly out there to one side of the spectrum or the other. And if you're looking at, volume wise, it's a very active product, less so than a WTI or an E-mini or the Euro dollars. Obviously, it's not something like that, but still pretty active, doing about 127,000, actually total about 135,000 contracts this week. And the number one with the bullet were the 1260 calls out there in July. So about 5,000 contracts total out there, about 1,400 on Thursday, kind of doing the lion's share of the volume. Again, smaller numbers, but still pretty active. Followed hot on his heels. So it's kind of front month at the money where the action was 12 half puts right around at the money, about 4,500 of those bad boys going up this week. A lot of that actually closing this week, which is kind of interesting. Not exactly surprising. This contract is going away in about 4 days. So not that surprising that we see a lot of closing action, but still that's kind of the lion's share of what we saw out there in the old front month today. We also saw about 1240 puts going up this week, 4,300 and change. Again, a good chunk closing out there. So it was a lot of kind of back and forth churn in the front month, a lot of closing as the front month kind of goes away. And that's not to say it was all front month. We did see about 30% of the paper going up out there in AUG as well, with about 1,300 calls leading the charge out there. So a fairly optimistic paper, about 3,100 and change, back and forth, closing and opening on the strike this week. So no net bias one way or the other. And then if you want to look a little bit, like to look farther out with metals too, because we do see some funky longer term plays out there. Not a heck of a lot really this week. We did see some October 2017. What is those? Those 1,200 puts going up about 600 of those, and then Dees is not to be forgotten either, with about 1,700 of the 1,000 puts going up out there in Dees this week as well. And then other than that, not a heck of a lot going out longer term as well. I guess, Nick, overall, a fairly quiet week from a gold perspective. Probably one we wouldn't have addressed if it wasn't for Ian's question. Yes, that's a long answer to your question there, Ian. There is a contract that tracks the future very well, an option contract, and we just broke it down for you. Any thoughts, Nick, on gold this week, or on the question that kicked it off there from Ian?
Yeah, I just mentioned on the gold, I was looking at the range of strikes and what standard deviation from the current volatilities for those expirations was where the trade was taking place. So most of the trade in the August and the SEP right now, I looked at those two. Those were the most active outside of the front month. Was taking place in a pretty tight, within one standard deviation of around the at the money. So, there's some speculation outside there, but just from a volume standpoint, and really not that much happening right now. Again, we're in sort of the same boat with this liquid product that trades, good strike ranges that trade, but not a lot of activity because not a lot forcing the hand of gold at this point in terms of rate decisions. We had that taken care of last week. Looks like we're going to be pretty steady for the time being. So we kind of back into our range. So this will be another interesting one. And just to note that this vol curve is, even though you're seeing some QuikSkew numbers out there, if you're looking, the at the money volatility is so low, your range between the 25 delta call and the put is pretty insignificant from a pure volatility standpoint when you're looking at it from a percentage standpoint. So, when you see a flat vol curve, that means people aren't really sure where we're going. So you're trading within that standard deviation, and that's pretty much what we're looking at right now.
Speaking of right now, Nick, it's like some people are managing to get the live stream, so I was glad to see that some of you are fighting through some of the technological hurdles to get at us here today. We got Ron Switzerland going back to corn, Nick. He says, what do you think about vol before the next USDA report here in corn? So he's making me go all the way back to my corn page. How inconsiderate is this, Nick, and make us go all the way back to this product. Interesting stuff. We were talking about this obviously earlier in the show. Corn vol was, I think the technical term you used, Nick, was crazy cakes. Is that what it was? But either way, it was a crazy week for corn. The skew was going crazy. We saw the vol going crazy as well. Vol actually coming off fairly aggressively, which is kind of interesting. Again, kind of counterintuitive to what a lot of people coming to this from the equities and indices might think. Hey, something sells off, vol should come up. We certainly see that with products like the vol of the indices and things, but the commodities play by their own rules of engagement. And this week out here, corn was kind of all over the place, Nick. We kind of touched on it before, but I forgot the name here. Ron Switzerland. He's got a specific date in mind. He's thinking about the USDA report. I know, Nick, neither you nor I are super ag heads here, but we can fight our way through it. What do you think here of this vol? We talked about it before, but not just the vol, but how it pertains and how it's shaping up ahead of the USDA report here.
Again, you said it best. I think we're not, as much as we're paying attention to that and sort of listen for it, we're not really watching or seeing what the acreage levels or the return levels are. Ron probably doesn't have much of an opinion because he is Switzerland, right? So that's probably one of the reasons he's asking.
He doesn't care one way or the other. We can say whatever we want, and he can't say a word about it, right? But I hear he makes good deposits over there. Maybe we should put some money with him.
He is. Yeah, I'm gonna follow him on Twitter after today. But yeah, I would think. I mean, I don't know that I'd want to be short given where volatility is and how. Or if I were short, I would be short the ATS here. But I still, like I said, I'm going to go back to what I mentioned before. I think the curve is the tilt on the vol curve is pretty significant. So I would think that, it's you look at it a couple of ways, right? If there's something's out of whack on the USDA report, vol's going to do something, right? So it's either going to move it could move or it's going to not move, right? But if it's out of whack, it's going to move. But it could move to the point where that skew flips back, but the skew's so wide that I can't see it going any wider. So that's why I'm thinking that, if you want to get in corn and take a look at stuff, take a look at that and see if you can take advantage of the fact that there's a big range between the calls and the puts, regardless of what the USDA has. It hasn't been this wide ever or close to ever. And if the USDA comes in line, or there's a bit of a rally, or whatever it ends up being, you're going to get the benefit of taking advantage of buying low vol and selling high volatility, right? Because eventually that low vol can only go so low, but that high vol can come in quite a bit. So I would say that I would look for spreads that work to take advantage of the vol levels in particular strikes. It would be my opinion.
What did you term it? You said it was the QuikSkew trade. We should coin that.
I just coined it, the QuikSkew. I trademark every time I type QuikSkew, so it's the QuikSkew trade, because it's basically based on the fact that you are putting on a risk reversal at a favorable level, and you're not hedging with futures. You're hedging with like volatility right in the middle. So you're basically doing a put spread and a call spread. So it's good for margin. It's a good margin trade, right? Because you're flat. You have no delta. I don't think that matters for margin. I'm not sure. You have no delta, but I think your Vega is, you could do it Vega neutral if you want, or you can do it delta neutral, however you want to do it. But it's a good trade, I think, just from a standpoint. We've watched it over the year and change with the beans. When it gets out of whack, you put it on and it does return. And what I like about the corn is I think you sort of have a level where you can get out of it, because if the put approaches the money and so does the call, you've rarely seen that go the other way, where the put's going to benefit from being bid over the call. So you sort of have this idea of when it gets wide, you can buy the put and sell the call. When it gets close back to like a flat vol curve inside that 25 delta range, you can get out of it again. So that would be my idea would be to just sort of look at the risk reversals going into the USDA and taking advantage of the disparate volatility levels between the 25 delta strikes.
Yeah, good stuff. I like that. Ron Switzerland, good. I like that handle. I just like saying that. A good question. All right, we got, let's see, we got a bunch here. I don't know, Mr. Nick, this one comes from Bugato. I don't know if you have this answer ready. You may have to dig, and maybe I'll set you up for it. You can come back to it a little bit later. He wants to know what's paying the rent this week, says Mr. Bugato. I know you guys are working on that report. I don't know if it's ready yet. You have any thoughts on the top of your head? Do you need to kind of dig into the system a little bit?
I just I've been listening to some 80s on 8 on Sirius, so I can only think of Domo Arigato, Mr. Bugato right now.
That's old. That's super old school. Wow, you're going back, sir.
I've been firing up some sticks, even asking Alexa to play some sticks for me. So what's paying the rent this week? My guess would be, and I haven't looked, you know what, Mr. Bugato, I have to do a better job. I just have to do that report, but let me see if I could take a look just from a couple places here. I'm going to go take a look at gold really quickly, because if you have our pricing sheets by chance on any of the subscribe levels of QuikStrike, you can see the rent numbers and then the range over rent and the change over rent. And it looks like gold did a pretty good job even today of paying the rent, because the day over day change kind of met its rent requirement, and the range definitely was over the rent requirement. So I'm going to say that we're in good shape there from a gold standpoint, that it paid the rent. And if it paid today, given what I saw on the moves in the futures this week, I'm guessing that it paid the rent this week. And then where it probably didn't do a great job was in crude, actually, right? Because as much as we had a break, we didn't get a good, or at least today we didn't do it. Probably one day it met its obligation from a crude standpoint. So I'm going to say crude probably didn't do a great job of that. And what else did we cover today? We covered corn, right? So if I could take a look at corn, I'm going to say, what do we have here? Let me look at this future price here. And what's nice when I'm doing this, Mark, is obviously I could go take a look and I can make 2 clicks and see where the corn's been on the week. I'm going to say corn probably, outside of today, probably didn't do a great job of paying the rent. So I'd say gold did, because we had a nice range. We came off and we bounced, and crude probably had one day of doing it. But overall for the week, I would say more than likely not. And then corn, just given the moans and groans I'm hearing on Twitter, in all likelihood, probably didn't do a great job for holding its vol today as well.
All right, let's let's bring it home here with, I guess this has become, Nick, TWIFO has become the de facto Bitcoin show on the network because everyone seems to hit us up on this show about Bitcoin, and we can't really ignore it this week. It was one of the crazier weeks in Bitcoin history. So we asked you guys at the beginning of the week, actually, we asked you guys, hey, everyone's talking about Bitcoin volatility these days. Where do you guys stand on Bitcoin after last week's, shall we say, aggressive downturn? And we gave you 4 choices. We said, hey, it's too volatile, I'm out. It's too rich for my blood. I'm getting the heck out of Dodge. Or I'm still bullish on Bitcoin. I want this thing to turn around. Or I want some Bitcoin options. Or I'm just sick of Bitcoin. Mr. Nick, what is your vote, and what do you think our listeners are voting for?
I think, what do they think? I think they want Bitcoin options, but I don't think that's gonna solve their problem, because when you have something rallying that hard, the vol on those options are going to be pretty significant, even if it's a one-directional thing, and you're going to have crazy skews from a call and a put standpoint. Although, I don't know. I think they want Bitcoin options. Me personally, I would say there are other Bitcoin-like products out there, like Ethereum got hammered this week. I think dropped from like 350 to 10 cents on some flash crash it had this week. And then there was another one out there, some cryptocurrency offered out by Ripple that I'm going to start taking a look at as well. So we'll start paying attention a little bit more. I mean, if you go to cmegroup.com and look on the homepage, you're going to see a couple Bitcoin indexes there, so you can stay in tune with what's going on there, at least what they have available. So, but let's go with, I want Bitcoin options. I want hashtag Bitcoin, hashtag options, or as my kids like to laugh at me when I say, # Bitcoin, because I'm
yeah, whatever
dating
happened to the
myself.
old #? That's go. That's old school. That's back in the days of sticks. That's funny.
And I think there was a song, #. There was some # song.
There was a song called #.
#. I thought it was hashtag.
While you look for that scintillating tune, I'll read out the rest of our listeners' votes. One pretty active one, as not surprisingly, a lot of you guys like to weigh in on all things volatility and Bitcoin. It's kind of a best of both worlds. The numbers have moved all over the place this week. So far, with about a day left here, we've got 40% of you in Nick's camp. I'm kind of with you on this one. I want some Bitcoin options. I do. You guys want them. I want them. I think everyone wants these. I think everyone wants to see this product. It's clearly got a lot of interest in it. It needs to be listed. It needs to be in a legit, actual lit venue, not these bizarre places where they trade right now. Obviously, these cryptocurrencies have issues. They have regulatory issues. They may not be around in a couple of years if they get wiped away from a regulatory perspective, but if they stick around and persist and are deemed to be viable products, they should be in some sort of lit listed venue where we could just not only trade the underlying itself, but options on them. And if that would happen, I think we'd see a bit of a damping down of some of these extreme moves in these currencies that have been just so crazy, because we see actual money trading them, the price gaps, the spreads wouldn't be as crazy. Right now, the product's just too prone to shock. So that said, 40% of you saying I want Bitcoin options or # Bitcoin options, as Nick said. 32% saying I'm sick of # Bitcoin. 19% saying it's too volatile, I'm out. And 9% saying I'm still bullish. So almost 10% of you still keeping hope alive. And you're right, Nick, we didn't get into the other Litecoin, Ethereum, all these other flavors of cryptocurrencies. You can really go down the rabbit hole with this stuff. But still, interesting stuff nonetheless. And I think with that, Mr. Nick, we want to thank all you, of course, for joining us. I want to thank all of our listeners out there for joining us as well, particularly you live guys who fought through the issues. That's what always happens whenever we switch down to the old Southern studio. Something's got to get lost in the work. Something's got to get gummed up. This week it was the live stream. I think we got it worked out now, so I think next week's shows should be fine. Look forward to more fun stuff from that. But before we go, Mr. Nick, you guys are always cooking up cool stuff over there in the Quick Strike kitchen. What you got on the stove this week, sir, for us coming down from Quick Strike?
Let's see. Well, first of all, let's hope that this # Bitcoin is not a # Grand Illusion, with another my final sticks reference, # Grand Illusion. So that might have been the song about Bitcoin that were very prescient back in the 70s, sticks, when they played my sister's prom back then. Can you believe that? They were the band in Chicago that played my sister's prom.
Wow,
so,
really? That's hilarious.
Yes, that is, yeah. So they had their like 40th anniversary, I think, of Grand Illusion. Yeah, it was 1977. So they played, I think they played a prom in like earlier that decade. So pretty crazy. So what's going on? What do we have released then? We got a new Treasury Analytics tool that went out last week. So take a look at that. If you are looking for treasuries and need to get some on the run information or some dollar value 01 or some yields as they relate to treasury strikes, that is out there, cmegroup.com/QuikStrike. You can see all of the tools out there. And we're going to be doing some neat stuff out there with being able to easily find expirations now and match those up to the underlying and that type of thing. So there'll be some expiration browsers that are going to be coming out there, as well as some block feed tools. So, keep an eye out. Nothing really that's gotten released that you can take a look at right away, other than the fact that I hope you're getting out there and using TWIFO report during the show. And if you tweet, we get enough people tweeting us, and I'll throw this out there. If we get some people tweeting to @QuikStrike1 and doing a # TWIFO or TWIO, I can't say #, I can't even say it anymore, #TWIFO, we'll liven up the links during the week as well for some time, and we'll put a tweet out there. So pay attention, but people got to ask. I only do it if I'm glad to do anything, but you got to ask. It's what I tell the neighbors, and it's what I tell everybody. If you want my help, I'm there, but you got to ask. So you want some report links? I'm glad to do it, but you got to ask.
There you go, listeners. Take them up on it. Hit the #TWIFO throughout the week, like a bunch of you did already with the questions and stuff this week. If you want some reports, Nick and his team are always putting them out there at QuikStrike, putting out a lot of stuff this week from these days on the platform. We retweet a lot of them as well over there at Options, so you could see them. Hit them up. Say, hey, I'd like to see a report on this, or I like to be talked about on the show about this, or I didn't like that, or I hate all the sticks references, whatever floats your boat. Hit them up using the #TWIFO, and if you get some good love over there, maybe we'll see these reports actually get active. It's a great way to get access to some great stuff for free, listeners. So if you want to get access to it, hit them up and let them know what you're thinking out there about TWIFO. You got a question, a comment, insight, pearls of wisdom, share them with us. We know a lot of you do. The more the merrier. It makes this even more fun of a party. And of course, I also want to thank our friends over there at CME Group, cmegroup.com/TWIFO throughout the week to get access to all these reports. Again, the links to click on them and do what we do during the show, where we dig in and see not just what the top strike is for that month, but also all the other stuff. Those links aren't live throughout the week. They're only live during showtime. But who knows? You hit Nick up enough, maybe they'll turn those on for you as well. You never know. He's a nice guy. He'll do some stuff for you if you hit him up. Like you said, just ask him, and he'll go for it. So hit him up over there. And also, if you want to learn more about these things, like Ian or some others who had questions about what actual products are out there that they could trade, then head on over to the CME's Institute. It's institute.cmegroup.com, and you get a little learning on, which is kind of fun. It used to be called the Futures Institute. They've rebranded it because, quite frankly, they do a lot of options education over there too. So check it out if you haven't done so already. You got some good questions about different products. Chances are they may have an answer for you. And on behalf of Nick and indeed myself and our friends over there at CME, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, and of course, for fighting through the technical issues on the stream this week. We love you guys as well for sending in those great questions. Keep them coming, and we'll see you next time for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.